There is no doubt the pandemic's been good for food delivery, but is it more expensive than you actually think? Joining us, Gene Munster, founder and managing partner at Loop Ventures. Gene, good to have you with us.
Hi, Melissa.
When I read your report, I was feeling a little, I don't know, ripped off, or I don't know what. I felt like I was just paying too much money. The average markup is 41 to 58% across platforms, Gene?
It does, Melissa, and that excludes typically a 15% tip that they put in. All three major platforms put in. You got to back that tip out. Adding insult to injury, that 15% tip is calculated on service and regulatory fees, essentially workarounds for what legislators have done to try to slow the growth of these fees. Maybe said a most simple way is that you are tipping on top of a tip when you do that. So yes, that's right, 40 to call it 55%. When you factor in the tip, it's more like an 85% markup. And I want to, this came to our light as we've been watching some of the legislation that's happened, popped up around local governments starting to cap some of these fees at 15%. And we thought this is a good move. And it turns out that simply they're adding what is called a regulatory service charge. If you look when you're checking out tonight, you'll see this. So it is more expensive than you think.
Yeah, most people don't really read that fine print. You can't get around a lot of the service fees. You can't get around, fees that were put in by regulations. But there is an initial markup fee as well, which is simply just, what the restaurant charges on the platform versus what they charge if you actually went to the restaurant. And that markup fee really got to me. That was 14 to 18%.
Correct, Melissa. And so exactly what this means, if you're going to purchase an item through DoorDash, for example, their Dash Pass app, and then versus just go directly for pickup at a restaurant, yeah, it's 14 to 18%. It's essentially a different menu, a different rate card. And the reason is that if we think back a year and a half ago, recall that restaurants were struggling with these delivery services really taking all their profit. And so they just figured we're going to create a whole separate pricing scale. And as we have thought a lot about this pricing dynamic, I want to just point out two quick takeaways from all of this beyond just the cost. I think one takeaway is that for a lot of consumers, time is money. And to pay an extra $15 or $18 and save 30 minutes of leisure time, this is our most valuable leisure time in an evening, that is a really good trade-off. But most people don't have that luxury. And why that's important when you think about investing in like DoorDash or Grubhub, Uber Eats, is that to get mass adoption, you really need to appeal to the masses. And right now, this is a luxury service at best.
Yeah, I mean, if you're paying 58% more, that's certainly a luxury. We've got 1 minute, Gene, literally. So if I hear about this delivery pass thing, $10 a month or so on some of these platforms, is that worth it to me as a consumer?
It's not. You really, at the break-even point is 4 times. It starts making sense at 5 times. It's just a few dollars a month. And what is most alarming, I think, as they pitch these as free delivery, it's far from free. They nix out a small charge, $1.50 charge typically, but all these other fees that we've talked about really rack up. At the end of the day, if you're going to do food delivery, it's going to basically assume that it's going to double the cost if you're going to go pick it up, maybe worth a good trade. But I wouldn't go and do these passes. About 27% of DoorDash users do the subscription. I think it's going to be hard for them to grow that above 50%. Prime is at 80%, 85% of U.S. households. It's not going to get there.
Gene, thank you for opening our eyes.
Thank you.
Gene Munster of Loop Ventures. Guy, I don't know if you're ordering. I'm not going to order in. I'm going to walk and pick it up.
I mean, you ask me, I mean, what are the chances? I mean, I wouldn't even know how to begin to do
Zero.
a DoorDash thing. Come on, Melms. If I'm jonesing for a Chipotle burrito, extra chicken, no beans, I'm getting in my car and I'm driving to my local CMG. That's just the way it works. That's GG DoorDash. So buy that SPAC, Mel.
But we got like 15 seconds, Guy. Which of these stocks would you like, if any?
DoorDash, I think, trades to 162. That's the average price target. I think it's overpriced at these levels, Mel.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.